Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at a question which is on everybody's lips at the moment, and that is that when will the Bitcoin parabolic move begin? So hopefully at the end of this analysis, which I'm going to look at, we will have a very good ballpark figure of when the parabolic move will start, where you'll have to fasten your seatbelts because it's going to be a bit of a wild ride. I'm also going to be having a look at exactly what's happening in the wider markets. I'll also be having a look at why the bigger whales, i.e. the bigger investors with the bigger pockets, why they're accumulating at this moment. And of course, we'll have a look at the 60-day cycle to tell us exactly what direction Bitcoin wants to go over the coming weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So I'm going to start off with the main theme of this video, and that is looking at the question, when will the Bitcoin parabolic move begin? And we've been having a look at this tentatively over the last few weeks, and today I'm going to give you the average days based on what's happened in the charts in the past cycle, so you can plan your holidays around this. And some of you with a very keen eye will have noticed that there are extra added lines on this chart, and these are the white lines as you can see here. So what I'm going to do today to ascertain exactly when the parabolic move will start, we're going to go back to the first cycle over here and look at two measures of when the parabolic move started, and then we'll average that out to give us some sort of a ballpark figure of what's going to happen over here when the parabolic move will be starting. Okay, I'm going to start off on the weekly chart to give us some sort of an idea. So the two measures that I'm going to look at today is firstly that before the halving in each of the cycles, we made a certain top, and when we broke out from there, that was one measure of when the parabolic move will start to the end of the bull market. And the second measure is our old friend, the pi cycle. And I'm going to be having a look at exactly when the red line here, if you've been watching my videos, you'll know that whenever we break above the red line after the halving, i.e. over here, that is when we start the parabolic move to the end of the bull market. So these are the two measures. Firstly, breaking the previous high before the halving, and secondly, which is the final hurdle, which is the final signal, which tells us we're at the start of the parabolic, the end phase of the bull market. This is the previous high here. We'll zoom in a little bit more so we know exactly when the breaks are. So this is a previous high before the halving. You put a white line across there. This candle is the first break of that white line. And when we measure that, from the halving to that break is 105 days. So that's our first measure. And our second measure is the break of the red line on the pi cycle. So from the halving to that first break there, this candle is 119 days. So I'm going to put it in this format, 105 and 119. And here we have the second cycle. So before the halving, the previous high, which is over here, we put a white line across there. And when we measure that, the break of this is this candle here, and we can see that's 168 days, and the red line is actually breached up here. So when we do the measure to that candle, this one here, that's 315 days. And the last cycle that we had back in 2020, when we had this halving, the previous high was this one here at around $10,500. And if we take a measure from the halving to the first break of that previous high, that was 77 days. And if we measure the break of the red line here, the red pi cycle, we've got 217 days. And in the current cycle, this is exactly where we're at. Before the halving, our previous high was this candle here at 73,747. So if we put a white ray up here, we can see quite clearly now we have a template of when this will break in terms of the price it needs to break above. So currently we haven't breached that yet. And the red line of the pi cycle here, the last time we looked at this was last week when this was around $86,000. But as you can see on the right hand side, it's now $89,000. So this line, as you can see, the trajectory is to the upside. So by the time we actually hit it, it may well be over 90,000, 90, 91, 92. So this is where we're at. We're waiting first of all for the white line to be breached, which we haven't done, and then we're waiting for the red line, and that red line will be the final signal that basically says fasten your seatbelts, you're now in the parabolic phase and you really don't want to look down because you're going to get dizzy. The price is going to be shooting up once we get past this line here. So the question, as per the title of this video, when will the Bitcoin parabolic move begin? The best guess that we can make is by averaging out the previous 3 cycles and having the best guesstimate we can over here. So if we zoom out, we can do the averages. Okay, so these are the figures that we got in the previous 3 cycles. We got 105 days for the breach of the white line and 119 days for the breach of the red line. And in the second cycle, 168 for the white line, 315 days for the red line. And finally, in the last cycle, we got 77 days for the white line and 217 days for the red line. If we average these together, so we add up the first figures, 105, 168 and 77, that average comes to 116 days. And the second figure, 119 plus 315 plus 217 divided by 3 gives us the average of the second figure, and that is 217 days. So this is what our expectations should be. Now, this is obviously based on the previous 3 cycles, which were the right translated cycles. And we know that the narrative at the moment, as it stands, with this current cycle, because we had the price action coming up to beat the previous all-time high of 69,000, it came and beat that before the halving, and that was our signal that this could possibly be a left translated cycle. So we need to keep that in mind, that this current cycle is slightly different to the previous 3 cycles. So what we really need to have a look at and keep an open mind about is that if this is going to be a right translated cycle, that we're going to break the white line after around about approximately 116 days. That's the average. And for the red line to be breached, for a right translated cycle, it's going to be 217 days. So we'll have a look at those 2 days, exactly where they are. So this now gives us a clue as to whether we're going to have a left or a right translated cycle, because if it breaks, let's say at half the time of these averages, then maybe that's the market giving us a clue that this is going to be a left translated cycle and that we will top out before the end of this year. But if the time it takes to break the white line and the red line is around about these figures here, 116 or 217, in between these, then that's the market giving us a clue that we're going to stretch into the next year, maybe through the middle of next year to the end of next year, for the normal right translated cycle. So if we now look at this current cycle to know exactly when we're supposed to break through the white line as well as the pi cycle. So if we now measure 116 days and 217, that gives us a ballpark figure for a right translated cycle of when we're going to break this previous high here of 73,000. So from the halving here, 116 days takes us to the 13th of August. So this is where the timeline is for the break of the white line in this region here. And for the pi cycle break, 217 days approximately, that takes us to November 2024. So this is going to be towards the end of the year. Okay, I've changed those lines to the green. That gives us the green light to go above the white line and the green light here to take us above the red line. So the whole purpose of doing this exercise is that those people who are in a hurry for the Bitcoin price to do this now, you really need to sit yourself down, drink a bit of iron brew, and you really need to be patient here. Because I've seen so many people leave the space as soon as we get a big red candle to the downside, like we did on Tuesday. People give up too easily in this space. And what you've got to do is zoom out and take a bigger picture view, which is really telling us that we really should not be expecting to get above the previous high of 73,000. We shouldn't really be expecting that, at least until around about the 12th of August. And if that's what happens, if it gets to the 12th of August, and that's when we're breaking up past that white line, then the next signal we need to look at is when it goes above the red line. And if that takes another 2 or 3 months from there, then that will be giving us a clue that this is a right translated cycle and that we're going to end up with a blow off top, which could be anywhere here between the middle and the end of 2025. So these are the clues and the signals that we need to be looking out for. Please don't get into a stubborn narrative and expect the market to play out to your narrative. It doesn't work like that, and it will catch you out. Always keep an open, fluid and flexible approach, and that way you will always be aligned with what's happening with the Bitcoin price. So I hope you found that interesting. So it's just another completely unique way of looking at where we are and where we're heading with the Bitcoin price based on certain parameters. So the main thing is always to elicit the information from the charts and then extrapolate that information and come to some sort of a conclusion, which is then based on objectivity and logic rather than your own personal emotional opinion. Okay, I'm going to move on to what's in the news out there so we can get a good overview outside of the charts themselves. And what we've got here is that analysts are targeting a price of 91,500 for the Bitcoin price. And that's despite the hawkish tone taken by the Fed. So again, this one aligns with our red pi cycle. That's currently at 89. And when we break that, it might be around about the 91, 92, 93, but it is in that ballpark figure. So I think most people looking at the charts will come to that kind of a conclusion. And if we have a look at this story here, because this really tells us exactly why, whenever the price for the Bitcoin goes down, why you should not be selling your Bitcoins, because there are other people, these opportunists here, the Bitcoin whales, they're willing to scoop it all up. And in the last 24 hours, as the price for Bitcoin went down to 66,000 and the normal retailers were offloading their Bitcoins, these guys were actually scooping them up because they know exactly where the market is going. So what you've got with this article is that in the last 24 hours, while the retailers have been frightened of the Bitcoin price going much further down, they're being bought up by these very opportunistic people here. And just to give you an idea of what's really happening that you may not be aware of, is that when the smart investors want to be selling their Bitcoin, they will be putting their Bitcoin onto the exchanges. So the number of Bitcoins on the exchanges rises when you come to the top of the bull market and people are willing to take the profits and sell their Bitcoins. But what's happening here? Is that we're getting the opposite of that, which means that we're about to start the parabolic phase, and the smarter investors are actually accumulating, and the supply on the exchanges is actually falling to its lowest levels since December 2021. These are the types of signs that are telling us that the market is more than likely, with a higher probability, going to be moving to the upside in a very big way. And in the last 24 hours, there was the largest inflow of buying since February 28th, when Bitcoin exchange traded funds were actually around about 6 weeks old at that time, and the price was approaching the all-time high at 73,000. So the message here is you have to think before you offload your Bitcoins, simply because the price of Bitcoin appears to be going further down. And if we move on to the liquidation map, we can see quite clearly here now that there aren't many yellow zones that were here before. So quite a lot of the leverage players have already been knocked out by this sideways consolidation, and time again they're being wrecked. And the biggest zones we've got so far here are around 69,000 and nearer the 70,000. So this is where I would expect in the next 24 to 48 hours for the Bitcoin price to go. And in the last video, if you watched it, you'll know that there was a yellow zone down here about 67,000, and within 24 hours the price came back, as you can see here, to take those out. So this liquidation heat map does give us a very accurate picture of exactly where the Bitcoin price is going, especially in the short term. So with these yellow zones, I would expect the price now to start rising and take out these shorts here at the 70,000 and the 69,000. And if you want to know exactly what's happening with the ETFs, we had a period of time when there was hardly anything going on into the ETFs. But in the last few weeks, this has really picked up, and we really need to be aware of this, because the grayscale bleeding that was going on, and while that's still happening to some extent, it's going to get to a point where grayscale is going to go down the list here. It's already lost its #1 position to BlackRock here, but there seems to be no slowing down of the amount of Bitcoins lost in the grayscale trust. But this is what we really need to be aware of. BlackRock is actually increasing its inflows by record levels at the moment, 9,600 over the last 7 days. And if you look at Fidelity, this is also catching up with nearly 3,000 there. So just between these two, we've had 12,500 Bitcoins being added in the last 7 days, while Grayscale has only lost about 3,000. So the demand here, just between these three exchanges, so a quarter is coming onto the supply and 12,000 is being bought up here. And always remember, the new supply after the halving is now 450 per day. So on a 7 days basis, that would be 3,000 Bitcoins. So we've got 12,000 being bought up, new supply is 3,150, and Grayscale's losing about 3,000. And of course, these ETFs isn't the only aspect of the market. There's a wider market with big individuals buying and selling, with the options market, with the futures market, etc., etc. There's obviously a big market out there. But what we do know with the ETFs is that this is where the institutions are. This is where the biggest amount of the buying and the selling is taking place. So this gives us a very good insight into exactly what's really happening with the demand and supply. And of course, we have to talk about what happened yesterday with the CPI data before the markets opened, and also the decision by the Fed to keep the interest rates on hold. And what's really interesting is that with the CPI data, this is the candle at exactly the time when the CPI data was announced at 1:30 UK time, which is 8:30 Eastern time. So you got this big massive move to the upside on the 5-minute candle. And this was in anticipation that the Fed may be tempted to reduce the interest rates in the afternoon. So that anticipation here was dashed by this red candle here at 7 o'clock when the decision came to keep the interest rates on hold. And the disappointment led to this big fall down to these levels here at 67,100. And this is where the whales were accumulating when people were selling their Bitcoin. So this is the kind of emotional trigger that these decisions by the Fed and by the CPI data can lead to. So the advice I always give to myself is to always zoom out on the charts on a bigger time frame and look at all this within context. So just looking at the charts on the hourly time frame, as we saw with the liquidation map, the chances are, the probability is that we're going to be moving up to around about the 70,000 where the yellow zones are. So that's where I would expect the price to be going over the next couple of days. So if we have a look at the inflation rate and what was expected, the consensus forecast was at 3.4% yesterday, and it actually came in at 3.3%. And this is the effect it had on the dollar, the red candle here. It actually broke the support, this red line here, and we've been talking about these lower highs all along that we've had so far with the dollar. So it looks like the whole trajectory is still to the downside, and once the interest rate cuts come along, we can expect this to go much further down. And notice the effect it had on the SPX. We had a gap up here just because of the inflation figures yesterday. So while Bitcoin didn't actually follow this particular route of breaking the previous highs, so there seems to be some sort of a divergence between Bitcoin and the SPX here. But maybe it's giving us a clue of where Bitcoin is about to go. We don't know. So certainly there is a continuation of this right translated cycle that we've been talking about. And with many days still to go to the end of this current 60-day cycle for SPX, we can expect this to now go much further. And yesterday's news is just encouraging it to do so. And looking at the 60-day cycle for Bitcoin, in the last video, I actually highlighted that this should be a support for Bitcoin here. And this is exactly what we got with this red candle coming back down and finding the support on this line at exactly 67,000. And with the liquidation heat map I just showed you, it looks like we're going to make our way back up over the next few days. And the wick on the daily chart here tells you exactly what's happening, that anything below the 67 is now being bought up. And some interesting things going on also with the Bitcoin miners. If we have a look at the example of CleanSpark, we can see we're in a bull flag here and going into this symmetrical triangle, and we're bouncing off these support lines. So you would expect a testing of the yellow line here, which is around about $19–20 for CleanSpark. So there appears to be another 12–13% to go before we test the yellow line. And of course, this will be the fourth test of this line, because we've had one test here, second one, and a third one, and we've been rejected each time. So this may well be where we break out and move towards the previous high here at around about $24. So there is a very realistic potential of around about a 40–50% increase coming up in the next few weeks with the Bitcoin miners. And despite this fall that we've had at the end of March this year, currently at around about 30%. It did go down to as low as 40% on CleanSpark. And for those of you who are following our portfolios in the private member section with the Bitcoin miners, our current tally is at 521,786, which is 20% up from the beginning of the year. And this is a portfolio that we started at the beginning of 2023 with $100,000. And our target for the end of this bull market is $5 million. So that means we're waiting for about a 10x with the Bitcoin miners, but I certainly won't be giving up my Snickers bar in any tantrums if we reach only 4 million or 3 million. So we are expecting a minimum of around about between 5 and 10x with the Bitcoin miners. But it all depends on Bitcoin. If Bitcoin goes up to $500,000, then this could well be 15, 20, 30x if the previous cycles are to go by. And just to give you some idea about what we're expecting with the Bitcoin miners, we've only had one cycle in the past, and that was here between 2019 and 2021. And you can see this outperformance by the Bitcoin miners, in this case Marathon Digital Holdings. So from the COVID situation to the top was a 30x leverage for Marathon against Bitcoin. So this is something similar to what we're expecting with the Bitcoin miners over here. So you can see quite clearly against Bitcoin we are at support levels. And we're just now bouncing off those support levels one more time. And the question is, are we now going back against Bitcoin back up here? So this is the leverage play. And once we break this, this is where the fireworks should start. And obviously there are no guarantees that this over here is going to play out over here. We're in a speculative market and we can only go by what the charts are telling us in terms of are they going to rhyme one more time. And if they are, then we're expecting a big explosive move to the right hand side. And if that's the kind of potential you're interested in, you can join us with the private Bitcoin miners member section. So if you want to join us, below every one of my videos, you'll see the join button here, as well as one in the description box. So if you're on a handheld device, you may not see the join button. So you need to go into the description box, click on here, and for the price of a Snickers bar per day or a coffee per week, but certainly don't buy both because it's a bad combination for your calories. Let's make it a bowl of salad per week. So for the price of one healthy bowl of salad per week, you've got access to 2 videos per week and the opportunity to take part in the ratio trades that we do, which are a unique way of trading without the risks, without the normal risks involved. And as you can see, we also do these market updates every single day, Monday to Friday, at the end of the closing session. And the ratio trades are the difference between our passive portfolio being 1% down and our trading portfolio, where we do the ratio trades, being 20% up. Okay, so we'll leave it there. We've gone all the way from Bitcoin to coffees and iron brew and Snickers bars, all the way to a bowl of healthy salad. You could be forgiven for thinking this is a nutrition channel. But on a serious note, please remember we're on a journey here. Don't forget this journey. We're at the last bit of it. Don't give up. So don't give up on the last hurdle. This is the big move hurdle, the parabolic move that we're waiting for. And if the previous cycles after the halving are anything to go by, this is where we will make most of the money. And that will be my final note. If you found value in the video, please do remember to like and subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.